Hey, Dana here. Hey, welcome to my vlog. And this is day trading. Well, what you're looking at is my TurboTax account because I have to, and we have to, account for our investing this year. The only share investments you don't have to worry about is ones that you've invested in the company that you work for. If you're going to be outside doing your own day trading or penny trading or whatever type of trading you're doing on your own, or if you're deciding whether you want to do your own investing, this is what you're going to have to do at the end of the year. All right? And it's all going to be set up depending on what your tax bracket is. And I really don't know what mine is at the moment, but the TurboTax takes care of that for me. So I've got all these shares, all these companies. Got 10 companies that I invested in this year. So these are the stocks that I invested in this year. These are all that I gained and lost this year. So what you're going to get a 1099 B, and they're going to give you all your stocks, when you bought it, when you sold it, and then you're going to put that in here. We'll jump back to I deal with ChoiceTrade, and I've got a couple of comments saying that ChoiceTrade is one of the worst trading companies out there. It's always my luck. I'll find the worst. But I've got too much money invested in these people, and I've had no problem with ChoiceTrade. My only issue I have with them is the fact that I can't put new money into my accounts without bank drafts going to them. Used to be you could write them a check, and once the check cleared, then you'd have money put in your account. Well, they won't do that anymore. So it's strictly through bank drafts and certified checks. I don't know if you consider it certified check, but bank drafts. Well, the problem is my bank charges $25 for every draft. So that can become expensive, especially if you're only putting $100 or so a month into your accounts to, invest. So basically what I've had to do is take money I had in the accounts before they stopped taking checks, and now I'm investing, buying and selling, instead of doing long-term investing. Long-term is anything holding a stock over a year. Anything under that, you sell it, is considered short-term. So we'll go to a trader. This is what's going on today. This is the 5th of February. Currently I've got a negative $554 on all my stocks at the moment. So you're basically watching things go up and down here. I got a couple of greens. But what you're going to do is you're going to go to manage your accounts, and then you're going to go to eDoc. You go to eDoc, then you're going to get confirmation statements, tax documents, e-delivery, and these are all basically confirmations of when you bought a stock or sold a stock in that time frame. So it'll tell you what you quantity that you bought. This is basically your receipt, and this will tell you all stuff about the accounts. And you go back, and your tax document, right now the only thing they have up right now is 2017. So I'm waiting for confirmation on the other one. So I didn't do my taxes, any stocks for 17, and I did it this year, and you can do that to catch up. So I shot short-term proceeds, and go down. It'll tell you what your stock was, and it'll tell you exactly how many times you traded that stock, and it'll give your gains and your negatives. And then when you go ahead and put it in your taxes, you don't have to do every single one individually. You got what's called various. So that's the total addition of all those stocks for that company. How many times you bought it or sold it, and then you're just going to go ahead and put your various. You're going to put in. They're going to ask you when you bought it and how much the original price was when you bought it. With ChoiceTrade, they include their commission with the initial buy, which is great. So you don't have to worry about putting $5 out off to the side. How much was the commission? It's already in your cost when you buy those stocks. So you're already, when you buy that stock, you got to remember you got a $5 commission. It's already tacked on to that stock. So if you only buy, say you buy 50 shares at, say you bought it at 30 cents, well, you're going to have to, what you'll do is you'll divide how many stocks you bought into 500 pennies. So that's going to add a couple more, maybe 36, 37, 38 cents total for that stock. So keep that in mind. And that's where I come into, if you got to send a bank draft, now you've had to increase the cost of your share by $25. Now when you do the draft though, I think you can write it off. I'm not sure. You're going to have to go check that with a CPA or your tax advisor and see if you can write that off. It might be somewhere in the tax system. I haven't gone to that. I haven't done that yet, so I don't know. I think you can write that off, but again, you'd have to check with your tax advisor. But if you're going to do an individual stock and put it in there, then it comes straight out like that. We'll go back to, I'm going to go. So that's how that worked out. Let's go back in here. Okay, back to tax forms. I want to come back out and go straight into. So go back to Trader Home. This is you're going to click on gains and losses. So you can set it to view whatever distance you want. This is just the last couple of weeks. Since 12/18, I've traded 4 times, and right now I'm up $472, which is great right now. Last year I got fed up with a stock that was just sitting, and I had a lot of money invested in it. Now I've gone out to a year, and over the past year, that goes back to 11/17, I had a positive $625, even though I had a loss of 107, 154, 58, 297, 26, and this is the one, EGY. I got fed up with it, and I went ahead and dumped it. And I took a $1,300 hit. Yes, $1,300 I dumped. Because I wanted to gain on another stock. And it did not pan out the way I wanted it to. But come to find out, when I'm doing my taxes this year, this is actually a positive influence towards my tax, because you can write off $1,300, $3,000 worth of tax loss. So what that does is offsets your taxes on your total gain for the year, which I didn't realize. What a lot of people do is they go ahead and dump a lot of these dead stocks just before the end of the year, and taking the loss, they can write that off towards their gains, so they don't have to pay as much tax, because what it's doing is it's subtracting the taxes from your loss. So look more into that. You'll understand what they're talking about. Okay. Again, I'm not a tax advisor. It's just what I've learned this year. So with all these losses, I've still gained $625 for the year. So I can't complain. It wasn't other than I did lose the 1,300 here, and a couple smaller 191. But with EGY, it did spike to a positive $1,400, and I didn't sell it. So that really got me upset. I held on to it. It was over a day. It shot to $1,400 in one day. And I said, it's going to hold on. It's going to keep going up. Because I was thinking about EGY's history. And I thought it was on its way up. And I said, well, maybe by the end of the day I'll go ahead and sell it and accumulate it. But when I did, it dropped. And it dropped and it dropped and it dropped. And I wasn't able to put the $1,400 in my pocket. And then it just kept dropping. And it dropped down to 50% of my value, and it sat and sat and sat. And then I saw another company that was coming up that I decided to invest in. It was VVUS. And I bought a bunch of stock in it with the money that I had from the EGY. And I did good, but I didn't do as good as had I sold that at $1,400 and had not gone ahead and sold that at $1,300. So you're gonna lose money. There's no way out of doing stocks. I can tell you that from my own experience, as well as you hear everybody else. You don't want to get in the stock market, you lose all your money. But you got to work with it. work with it. So I got two things I got to put in. I got a CAR. I've got another CARA I got to put in, and I got to put another KSHB in, and that's going to finish up my taxes for the year. So to do that, what you do is you go into add. So I'm going to add another one. And choose the type of investment you sold. And you got a whole list. You got land, collectibles, personal items, employee stock plan, non-qualifying, restricted stock awards, mutual funds, bonds, anything else. In this case, we're going into stocks, and that's accept stocks acquired via employee stock plan, and that was what I was just talking about. And we're going to continue. Okay, description. So I'm going to do the first one here, and it's going to be, let's see, I'm just doing the abbreviated for it. Number of shares sold. This is a simple one, 2. Date sold. Now on your 1099B, it's going to tell you date acquired and date disposed of. You probably can't see it, but it's on there. So let's see. Date sold. I don't know why they don't do acquired first, but they don't. So it's going to be 01 13 2017. I'm catching up with my stocks from the past. And how much did you make off of it? So cost basis, and then you're going to get proceeds and reported gross adjustments. Well, unfortunately, when I sold it, I made $17.69. All right, and then it's going to ask you taxes were not held for the sale, which they weren't. None of these. You can have the company hold tax if you want for it. If you want, that's totally up to you. Okay, so you're gonna mark that, and then and down the bottom here, I paid sales expenses not reported by the broker. And of course, this isn't common. That's the $5 that they charge every time they buy your stocks for you. So you wouldn't want to mark that. And continue. Okay, there we go. 2 carat checks. Stocks. You wanted the date January 3. Report only in 18, or short sales can be sold prior to 18, which is what this was. So this correct. Date sold. So now that was the disposition. That was when you got rid of it, and that's what it says here. Okay. Then the 2 shares. I bought this stock. I inherited it, received it in divorce, a gift, short sale, cash in lieu. It gives you a whole slew of things. And one time or multiple times. Choose the times you purchase and receive the stock of this particular sale. Well, this was a one-time sale on this one. And let us know when you bought the stock, which in this case it's going to say date acquired, which was 01/12/17. Okay, How do you want to enter this? I want to go as per share, or total purchase price. 2 shares, and my total purchase price on that was $26.40. And the commissions were already in there. So as you can see, it was my original cost without it was $21.40. Okay. If you think stock may be qualified, no, it doesn't. I know that. No, it's qualified. Is not. You're not. This is not a qualified small business stock, which means you're doing this for somebody else. I'm doing it for myself. Okay, some question about the stock. Turns out you had a $8 and $71 loss, and that's what it shows on your 1099B. It shows that loss. And did you buy additional shares and reinvest it? I did. So you can put yes. It's not, doesn't appear to change anything. And then it asks, did you reinvest it between December 14, 16 and February 12, 07. So there's you got a big time frame here. And you bought it in January. So did you reinvest these between December 16 and February 17 when you bought it in January? So basically you're saying yes. Were all stocks you acquired between those February included in the sale? Yes. Which basically is saying that any stocks that you bought, you turned around and reinvested. You didn't take any profit from the sale of it. All my money has gone right back in, so I don't have any money that I did not invest. So it doesn't appear to do anything. And then again, proceeds 17, cost basis was 26. You had a negative 871. Okay, did you sell any more? Yes, one more. I didn't even notice if that changed. Okay, we're going to do one more. And this is going to be a little different because it's not going to be individual. This is going to be, like I said, a variable or variance, which is multiples. So I did stocks. Coming up. Description, and that's going to be, I can write this one completely out. Okay. Oops, sorry about that. Right under my. Okay. Number of shares sold. So we're gonna shows 123, and date of disposal. And that's gonna be 12/05/2017. And net proceeds, how much I made off of it. In this case, sold it for $386. $88.59. no, the taxes are not held, so I'm going to watch that jump. And what it's going to do is it's going to account for, when it drops down, it's going to account for the entire $388.59. Now, I'm going to go with date sold. That was date sold. Was 5/17. And I can do that because of the fact it was a short sale. And that's the thing, if you got a lot from, say, take an example from this year, if you've got a lot of stocks and you use up your negative sales when you do it next year, you can hold off from what I was reading. Alright, I bought this thing. You can go ahead and use up the 3,000. Once you use up the 3,000 loss, you can hold off another year. Okay, tell us when you got this investment. That was on the I acquired it. Oh, okay. Purchased. And date acquired. Date acquired. Now, what you're going to put in here, you're going to put various. V. A. R. I-O-U-S. Okay, so you got a various time frame that you bought it. Okay, so I'm going to enter total purchase. Total purchase on all of those was my base cost of $296.82, and the commission fees were already included. And what's going to happen? You're going to watch your counter go back up. Not much. Okay, and you either did not enter a date or you entered various as the date you acquired. Okay, did you acquire this investment before 12/5? And 4/12/5/16. No. I don't have any 16s in here. They just want to make sure it is a short term and not a long term. So no situations, and you're good. And in this case, I had a $91.77 gain. Let's not see what that was, because that's not what it shows. That's not what it shows here. I'm off, so you're gonna have to go back and verify why. Go back. And you can do that, and just go back. Go back. Make sure it shows, justifies. Is that a 6 or is that an 8? I think that's a 6. Got an 8 in here. And I'm thinking it's a 6. That would show the difference. Okay, continue. Everything else should be the same. Okay, sold. Sold, correct, 517. Okay, I bought it. Okay, let us know when you bought this stock. Okay, you got multiple again, so you're going to put various. Which is nice. If they got them all together, it's going to say right at the bottom, various. So you don't have to put in 10 or 12 or 20 times that you bought or sold it. So the purchase price again, $282. Commissions were added. Okay, did you acquire this before? No. Because my latest, I bought some in August. I bought some the first of the year, and I bought some in August. So, and there's no special, in this case, no special situations. Alright, and that shows, yep, it was a 6 and not an 8. 89.77, and it's what I got. So there we are. I got no more to add. So, continuation, and if you need to do another one, you just go ahead and say yes. In this case, you got no more. So it's going to take you back. And there you go. You can check, double check, make sure those were in there. Kara 2 and Keisha Bottles. And this is giving you negative and positives. Alright. There we go. And I am done. Alright. So, here's investment sales so far. I did $22,882 in transactions. That's not how much I. It's not how much I made. I wish. That's not how much money I have invested. I wish it was, but that's how many transactions I made, and that's how much money I spent total in transactions. And $634 is my gain for all those transactions, and that's basically what I'm paying tax on, is the $634. You're not paying on your principal, you're only paying on your gains. So that takes care of that. Alright, so thanks for watching. Don't forget to share, comment, definitely subscribe, and we will catch you on the next day trading.